is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for kicking off the afternoon right here. We got 53 minutes left to go until the closing bell, folks, and we got markets in the red. You just tested the lows in the S&P. You were down there near 68.50. Coming into the 3 o'clock hour, we're catching a little bit of a bid, and we'll see what the final hour holds. We got volatility in two ways in this market, man. Right back to where we were on yesterday on some of the action. Yesterday in the S&Ps, you had a low right at the open of 68.61. We're trading at 68.64. Within a couple points of where we were on the open. And you talk about a roller coaster ride since then, though. My goodness, in both directions, right? Yesterday, and then again, overnight, you were as high as 69.10. And just like that, we're 60 points lower. Intraday at 68.50. You had some action in both directions as well. Yesterday, right? All the way up from a low yesterday morning of 24,752. You make it up about 350 points, just above there, to above 25,100. And where are we right now? Right back in near those lows. And look where we just tested, almost to the tick. 24,751, and we have a low of 24,752. How about that? Right. We opened yesterday. That's where we just bounced right now. Going to be a critical area in the final hour. See if we can hold. You look at the Dow, right back to where we were on Tuesday. Okay, not quite on Wednesday. The Dow accelerating lower, way below where you were on the open yesterday. We're at 49,408. The Dow's off 0.6%. The Russell off 0.1% right now. We jump over to yields. Yeah, quite a little reversal in terms of it was higher price, lower yield. We've pulled back a bit, and today, yesterday was some light volume in that yield market. Today we're up by one tick right now. We get the 10-year pushing about 4.08. The dollar's caught quite a bid. 97.89. We were over 98 briefly this morning. And metals holding up well with a strong dollar. With gold sitting above 5,000, you're flat on the session, 5,009. You jump over to silver right now, trading at 77.84. Silver up by 24 pennies. All right, let's jump around to some of the action. Walmart, as I mentioned. So Walmart off 56 pennies. They come out with their numbers. Now, the forecast was weak. And talked about it this morning. You talk about those numbers, man. They barely beat on the current quarter, okay, by a penny. And for the fiscal year, they're now looking for $2.75 to $2.85 a share, and the market was looking for almost $3 a share, right? Wouldn't have been outlandish when the market's looking for $2.96 for many companies to come in and beat that thing and be at around $3. No, they might be at $2.75. Now, the reason you saw, and that's the current quarter they just reported, they beat by a penny, they beat barely on revenue, but what the market liked is some of the comp sales, and that's probably why you saw that acceleration. To jump back to the chart, they forecast earnings, the AI systems, the algorithms pick it up, they trade it lower. You look at the comp sales. The conference call begins at 8 a.m. this morning. This thing takes off, and then, man, we had some selling, though, coming in at late 11 o'clock. But check out these comp sales from Walmart. Talk about retail. E-commerce sales up 27% with a year ago. Store-fulfilled pickup and delivery of online orders. 15th straight quarter of double-digit gains. Now, that's the 15th straight quarter, but they were growing on very small numbers previously. They're not growing on small numbers anymore. The company's U.S. business, e-commerce, was almost $1 out of $4, and they're growing that at 27%. A record high for Walmart. Online. Hey, I do it all the time, man. Okay, we're talking Sam's. By the time we get to 3:11 p.m., we're just into the program, but I order Sam's online all the time. Those get delivered. I order Walmart online all the time. I think Sam's, I got to get to $50, I think, for a free delivery order from Sam's. Walmart, I think I got to get to $35. It's quite a system, right? They trap you into those minimums. Not a bad deal, though. And yeah, I'm not the only one doing it from these numbers. Digital growth in the quarter included a 50% gain in store-fulfilled deliveries and 41% increase from Walmart Connect, an advertising business. Pretty remarkable. Their comp sales are growing, digital sales growing. $30 billion share repurchase, replacing the $20 billion buyback that they put in place in 2022. So Walmart down about 0.5% right now. Jump over to Target, flat. You kick it off with some of the retailers. TJX down about 0.8%. All right, let's talk some crude. Yeah, it's not stopping, man. 66.59 right now for crude. Got a little spike this morning, but tensions ratcheting up in Iran. And on a weekly basis, now we're coming into a short week here, so it's going to be tough to get the volume. We're closed on Monday, even if the futures were trading, which I think they were, but the markets were closed. It was a very low volume day. But you're about to take out the last 3 weeks. You're not going to do a volume, though. It's the end of the day Thursday. We got one more day left. It's a short week. But you're breaking above these highs. I mean, look at this. We're back to prices. Wow. All right. You better believe this is getting serious, man. You know, a month ago, we were trading at $58 in crude. We're trading at 66, and we haven't seen these prices going back to July. We're getting lulled into, very cheap gas. That's hey, crude catching a bid up $1.50. And, we talked to Teddy Kegstad, folks, on my morning program, Wednesdays, 9:40 a.m. Eastern Time. Wednesdays, we talked to Teddy, the author of the Tiger Forex Report. And we were talking about the dollar. And he does a great job, and he's educated me so much over the years in terms of, America. We're a producer of crude now, folks. We're a producer. Okay, we're a consumer as well, but we produce a lot of crude. And so when you see those crude prices rising, that's going to bring a lift to the dollar. It's one of those components. You have yields drive the demand of a currency. Well, guess what? You know what else drives the demand of a currency? When you're a producer of a commodity versus if you're a consumer of that commodity. So for countries that are consumers of crude, right? Yeah, this is not a good thing. Because you're a consumer. And you have to pay for all those prices. And who are you paying? You're paying the countries in their currencies that are the producers, like the dollar. So you're going to take the yen, you're going to buy some dollars, and you're going to buy some American crude, and it's going to be more costly. So you're going to put a demand. And with that, we get the yen pushing 155. You get the dollar at 98. S&P's off by 30, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kegstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kegstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And yeah, this market just chopping around. You know, we hit this price point right on the open. You caught a bid, and we've just been chopping pretty tight trading range. You're only talking about 10 to 15, maybe 20 points, I guess, on the downside. Yeah, 20 points. Boy, it looks so small. We've just had such large moves on this index recently. 100, 150 points, almost like it's nothing. We jump over the VIX right now. 2069 right now on that VIX. So, crude. Higher prices in crude. And yeah, whew. We'll have to watch those betting markets, folks, and you better believe I'm being serious, man. You know, there's. So as the headline says, the U.S. amasses forces as Trump says Iran has just days for a deal. The pressure is on. And I appreciate you posting that in the Tiger's Den. Oof. Yeah, and so the quote there, Trump said he thought 10 to 15 days was pretty much the maximum he'd allow for negotiations to continue. 10 days or the bombs start flying. That's the implication, as the expression goes. I think that would be enough time. Maybe it is enough time. All right, what's the holdup? We'll see what's going on. We're going to make a deal. You're going to be finding out over probably the next 10 days. Not 9 days, not 11, folks. 10 days. Hey, that crude market, as I said, crude, higher prices. We haven't seen those prices since July. Risk getting priced into that crude market right now. And yeah, you got aircraft carriers. Aerial tankers, surveillance aircraft, and drones in Jordan, Crete, and Spain. So, and hey, you know, you never really know what posturing is and what reality is, right? It's not a game. It's war. People can die. But the negotiation of it is pretty close to, when you're dealing with that, a poker game. And maybe you're bluffing and maybe you're not. And nobody knows until you get called. Right? And that's the deal here. So it's a pressure situation. But you better believe that pressure is coming into crude for a real threat. When you just went from 61 to 66, and we've caught a bid like we haven't seen in some time, man, and you're breaking above this consolidation, and you're almost going to do it on volume. Right? We got volume out there from January 29th of 528,000 contracts, and we're at 405 right now. It's a big day. Pressure's on in crude. All right, let's talk some other equities. How about DoorDash? You talk about some volatility. Look at this thing. If you were selling volatility last night with options that expired at any time, you might have had a couple heart attacks in the overnight session. but you're making money because Dash is just off 1%. After this thing traded from 151 up to 99, started at 175, and you're back. $25 down, then a 33% acceleration higher, and now we're, 12% lower? You talk about some volatility on DoorDash numbers, man. We check out those numbers for DoorDash. Now, ignore the headline on those percentages. But revenue, yeah, and that's the reason you saw some of that escalation. But there's more to it than that. They miss on earnings, 48 cents versus 59. They miss on revenue. Okay, but what makes this so volatile, I think, is that you missed on numbers, yet the growth on DoorDash is staggering. They're doing almost 1 billion orders, 903 million orders. Marketplace gross order value, which is just the total dollar value of the orders. Now, that's not the money they make, right? They're making a small percentage. Well, it's not that small, but they're making a small percentage. A lot of that's going to the companies, right? The restaurants, whether it's Publix, the grocery stores, the convenience stores now. They get everything. $30 billion. And that's in 90 days. Imagine that. They're doing $1 billion every 3 days. Confidence in the company's investments and touted strong performance from Deliveroo, which they acquired last year, growing much faster at the same profit. Actively building new products and systems to enhance the user experience. And yeah, but in terms of where they are, guidance, 675 to 775 million in profit versus 800 the market was looking for. And they're still taking some hits from Deliveroo. How's that for some volatility? We take a look at the daily on this thing. Now, the daily doesn't reflect that you were up to 200 pre-market, right? And it probably shouldn't. Very little volume on that move. Jump over to Uber. So Uber right now, up about 19 pennies following that move. Let's jump over to the home builders. So we're pulling back on the home builders today. Lennar off by 4%. We check out the volume. You zoom in. Yeah, we got a little bit of an uptick in volume. Okay. Boy, we double top right at the January highs. You jump over to DR Horton, down by 2% right now. That's some light volume on that one. 1.6 million. Look at the numbers we're doing right now. Backing off from the highs on light volume on DR Horton. Clark, KB Homes. Yeah, very light volume as well. Look at this one. Nothing. 379,000 shares. That's an entire day. Wow. Look at this. KB does not trade much volume at all. Look at this. On a 15-minute basis, this thing's only trading 5,000 shares, 7,000 shares. They're not quite the size of the other companies. Let's pull this up for a second. It's a $4 billion company, man. You're trading 6,000 shares every 15 minutes. That's nothing. Lennar, 28 billion. And DR Horton, 47 billion. All right, let's take a look at the heat map. Financials. Look at this. Goldman off 2%, Morgan off 1.5%, Berkshire off 0.6%, credit cards MasterCard off 1.7%, and the chip stocks as well. Not a lot of green on this chart. What do we have green? The industrials and energy and utilities. Southern up 4.6%. Oh, let's jump over to John Deere. Yeah, we were talking about this one on the morning program. Look at this thing. Look at this thing. Look at the sustained volume of the last 3 weeks, folks. Okay, you're going to have 3 straight weeks where you're pushing almost 10 million shares on an upward trajectory, and we got a full day of trading left to go tomorrow. You're doing 5 million shares today alone, and this is a short week. We're only doing 4 trading days, and it's going to blow away the highs on volume. You're probably heading to 750 on Deere. Okay, Deere's out with their numbers, and yeah, gangbuster numbers, man. We take a look at the volume in gold. We're going to come back and talk to our man Tim Ward. We'll talk some equities. We'll talk the indices, folks. We'll talk metals as well. And you got gold right now. Hey, we got dollar strength right now, and gold still holding up well at 5,013 right now. Volume still a little light in this market. Only, what are we at? 79,000 contracts in gold right now. And silver, same thing, right? Where's the volume in this market? 37,000 contracts in silver. All right, folks, S&P's negative by 33. We got the NASDAQ 100 off by 177. We're coming right back with our guest, Tim Ward. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps negative by 30 right now. NASDAQ 100 off by 156. And right now, folks, we're going to jump over to our man, Tim Ord. You can reach Tim at his website, folks, right here, ord-oracle.com. There's Tim Ord right there. And he's got a couple of great webinars, folks. At the front page of TFNN, you hit the services tab. You'll see Tim right there, 2 great webinars, The Secret Science of Market Tops and how to identify those market tops, as well as 6 secret ratios every trader should know. He's got some great ratios in there, folks. We talk about some of them here every time we talk to Tim. Tim Orr, good afternoon.
Yeah, good afternoon. So we were talking Tuesday that a lot of requests for silver market. So we're going to look at silver market. And we're actually going to look at a couple of stocks too. And actually, both of them are not silver, but stocks that could have some decent moves on a short-term basis. But so let's get into the. Here's my email address. This is my website. Sometimes people can look at it. It's easier to say. But anyhow, let's move on. Did that thing go away here? Let's see. Let me get I moved it. Well, anyhow, this is silver on the top window, and in the middle window is a monthly silver gold ratio.
Nice.
So this chart goes back to 1982. So I took us back as far as I could, and there's a valuation in here, and actually silver, the silver gold ratio on the monthly chart just touched this blue area right here. You can see anyhow, this is.
Yeah, no, definitely. We got it right there, yeah.
Yeah, that when he gets there, usually market's overbought, or valuation-wise, is the values are high. And and I marked the other blue times that has happened going back to 1982, and you can't quite see it here, but that was a major high in silver. This picked out that top, I think it was 2008, the valuation was high. So we're valuation's high, but we also got momentum. We got an RSI. This is a monthly RSI of the monthly silver gold ratio. It got right now we're around 77. Also did a rate of change, which is kind of another momentum indicator. Anyhow, all these red lines going across here are times when the bullish or percent bullish, in other words, you're above the upper Bollinger Band. That's part of that red line. The RS rate of change 12 is overbought, and the RSI is overbought. So you get a lot of different indicators suggesting this market, this ratio has moved up too fast, needs a rest, and it also got an overbought. So let's look down to a smaller time frame. This is a weekly RSI. Let me try to get that.
And that was the monthly we're looking at. I know I'm back to 82, right? Is that where we're looking at, the monthly, the first one?
Yeah, the first one.
And this is a weekly now? Cool. Okay.
Yeah, now we're down to the weekly. You can kind of see it better here. We hit overbought 0.2, and I marked the other times we did that. And you can't see it, but it picked out almost all the decent highs. Picked out the 2011 high, and we're back into the overvaluations. So you got the monthly RSI, the monthly percent B, Bollinger Band, and the rate of change on the monthly time frames all overbought. And the weeklies are overbought here too. So now you got the monthly and you got the weeklies, and you got overvaluations. So let's get down a little bit lower here. This is the silver gold ratio again, and this is the this is the daily. So now we're down to the daily. So again, the bigger time frames rule the shorter time frame. So the monthly rule the month, or the monthly rule the weekly rule the dailies. Well, the dailies also got into this area too. So all of them, and the bottom window is ROC, rate of change on a 12 period, got up plus 10. So, and evaluations here. So silver, compared to the value of gold, is overbought. So this ratio, since its valuations got overbought and momentum's got overbought, you're going to look for consolidation. That's something I've been kind of saying for a while, but how long does it last and where can you go? Here's my take on this. This is monthly silver. You can see it a little bit better here. This chart only goes back to 2010, and I marked the times when the silver. This is silver gold, or this is silver stocks compared to silver. So silver's overbought. So what, to me, the big money is going to be made now in the equity market, not the precious metals market. I think gold and actually silver are probably going to go through a consolidation. But I think what I'm seeing here anyhow is the run in the equity market. In other words, the silver market, the gold market, equity side of things are still way in front of us. And the time to buy, I guess, so SIL is the silver stock. SLV, the ETF for silver. So this is a ratio. And so when this ratio gets up around 0.2, valuations of the silver stocks compared to the price of silver is overbought, and you should get out of the market. And it picked out those highs. Did a decent job going back, 15 years or thereabouts, picking out all the highs. And we never, so far, silver stocks have not reached the valuation up compared to silver up by this 0.2 area. We're actually still pretty low. We come off the lows here. Anything below 0.125 looks like about is a buy, and that's what these green areas are. You should buy when the valuation's low compared to silver. And so you would have been a buyer in late 2015, 2016. You got that low. Market rally, that should have got out that high. Never really gave a buy, but it gave a kind of another sell in mid-2020 because the valuations got up around 2. It got a big buy between 23 to 25. Valuation never got to 2. So if we do start, actually get another buy in actually 2000, it looks like January here, it hit that 0.25 and bounced up. If it comes back down again, which I think it will, below 1.25, I think you should be buying silver again. I think that's where we're heading. So the silver stock run, I think, is still in the early stages because we're not getting overbought here. And if this ratio falls back down below 0.25 again, I think it's time to buy silver stocks. So I don't think there's a big decline in this potential consolidation for the equity silver market.
That's a great walkthrough. We're going to come back and keep talking to Tim. And I got a chart of that SIL up, Tim. Pretty cool. In October, it was at $80, and you're only at 103 right now. And I say only because, of course, silver back in October, man. You were trading at almost $49, and you're at $80 right now. So quite the run. We're coming back with Tim, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps in the red, silver up by 61 pennies. We're talking with Tim Ward. Remember, folks, you can reach Tim at his website, ord-oracle.com. He's got a couple great webinars under the services tab, right at TFNN.com as well. And yeah, I was just rushing at the end there, Tim, but you're going to, and that's the point you're making and why I love these ratios that you work with, man. I know you, but it's pretty cool when you look, silver equities have not priced in the appreciation that the metal has had when you were trading it. $53 the high, and I'm cherry picking the very high of that October 13th rally was $53. You're still at 80, but then when you went over to that SIL, I was looking at it when you were talking about it, and I'm pulling it up right now, and that thing, we've only gone from 80 to 103. So you're only up 20% in the equities from where you were. Meanwhile, you're up almost like 60%, say a much larger number on the metal.
Yeah. So that's what I'm saying. So this, things kind of go at the end, they go parabolic. Now, there may be a parabolic move in silver itself and it's due for a rest, but these equity issues have not yet, because when it gets up here on 0.2, that's when it's gone parabolic, and you can see previously anything above 0.2, the market, the equity market is getting expensive, and you should be looking for the exit. If it gets overbought. So I'm thinking if this market does consolidate, I bet this ratio falls right back below 0.25. And valuations, again, that'd be a good buy. So anyhow, that's what I'm kind of looking at. That's what I'm kind of talking, the gold stocks, or the gold itself and the metals itself, had a gigantic run. If you look back in 2024, this is SIL, but, give or take around $20, went over 120. 500%, it's due for a rest, and where the gold, the silver stocks, hadn't done it yet. So I'm thinking that time's come, and when things get too good to be true in the silver stocks and gold stocks, it's time to get out, and these valuations will get way out of proportion to the upside. I think that's what's in front of us. But let's switch over to gold here a little bit. This is GDX.
Okay.
And here's one thing that's going to happen. GDX, that's where, Barrick Gold, AEM, Newmont Mining, all those big gold stocks look similar to this GDX chart. They went just straight up parabolic. And I'm back down buying the lower tier stocks now. I sold out. I don't think I even have any blue chip GDX stocks. And time to really... anyhow, let's look at this chart, see what I'm expecting here. If you notice back here, you had a higher... I wish I could get my drawing tool here. For some reason, it's not working. Let me try it one more time. No, it's not going to let me do it. But anyhow...
That's okay, because we can follow. What are you looking at? The October volume? Yeah, that October spike, right? Yeah.
Yeah, October. So if you can sell here, the GDX went higher highs here. And this ratio went lower highs. That's a warning sign. And here we haven't had that yet, because we haven't had it touch the new high yet. But normally these great big candles like this, I don't know, I hate to give a percentage. I bet 90% of them are always tested. And to get through that high, you have to have volume at least equal to that high. Now, this is on a weekly time frame, and that high came in around 270 million shares. So we're screwing around in this area down below that high. But at some point, we're going to go up and test that high. To get through that high, you'd need at least 270 million shares. If it falls 10% less than that, something less than about 2.5 million thereabouts, you're going to find resistance, because you test a previous high and 10% ladder volume, that previous high is going to be resistance. So I'm thinking we're going up and test that. We're not going to get through it. And for confirmation, if this is market's going to continue, this ratio here, just GDX GLE ratio, is a weekly time frame. If it goes up, makes a lower high, while at the same time, excuse me, that GDX tests its previous high, so you'll have a divergence. So that'll be the time to sell GDX. Now, let's go the other way. Say GDX go up and test the previous high on 270 million shares. That says you get enough energy to push through that high. And if you got this ratio also making higher highs, this market's going to keep going. So which is it? Well, I don't know. I don't care. We just got to watch what that happens at that previous high. So I'm thinking, we had a run for 2 years now. I think we're probably going to flip sideways here. Nothing significant to the downside, because that to get through the downside, you need 270 million shares. And I don't think you're going to have that. The volume as you go sideways, more or less, as in consolidations, the volume between the highs and lows become less. So I think this market's just going to go sideways.
And
but
right now, we're at 60 million shares right now, and that's basically 3 trading days, but that would be 20 million a day. And if that's what you're doing, that's only 100 million for the week in terms of what we're doing right now as we're drifting higher with the GDX at 104. I mean, that's what, 59 million or something. It's a short week. We're about 3 days, but still light volume. Light in the metals, but even the GDX this week, pretty light volume as it's creeping higher. Yeah.
Yeah, but this is the majors, so that's what I'm talking about. So I should have looked at the GDXJ, which is the juniors, and we'll take a look at it maybe next time around. But the seniors are going to take a rest here. There's always a stock that I want to pick. Getting back to GDX, I think we will test that high, and we'll talk about it if we get through it or not. But there's 2 indicators saying that if we don't get back, GDX GLE ratio fails to make a new high while GDX tests its previous high, chances are you're going to flip sideways. But it's not a big downside. Previous low around 93 is going to be support. So it's going to be a fairly narrow trading range going sideways. They're not going to get you, since most of the public has missed the lows in the gold stocks, they're not going to let you in cheap. So this probably GDX is not going to go back down to like 45 or something, or 50. They're going to keep it expensive, and they're going to hold it up here. In my opinion, we'll cross that road. I hate to do opinions. I like to do technical analysis, but I think that previous high up around 113.50 is going to be it. So,
and I agree in general, and what you're saying, right, is, and there's been a change of, we may not be, and I'm just adding my sense, of course, we're just speculating it to a certain degree versus the technicals. I agree. But yeah, it's I wrote in the gold report the other day or something. I said, we might pull back. I said, but we're not going back to like these days when we were like 2,000, 2,500. It's the same type of deal. The way you're saying, like, that's not the pullback that I think we're risking here. Things have changed. Whether you're talking about this year, next year, these equities and the price of the metals, I think going forward, and the dollar's getting a bid today, but the dollar's been weak, man. Yeah.
Let's take a look at one more stock here. This is an inflation-deflation ratio, or this is a high shares for commodity index. This is all the commodities. This is pork bellies, this is wheat, this is gold, this is silver. It's everything. This is what I talked about this chart before, but we have an impulse wave off to the bottom of the October. Well, that would be the COVID crash, and it rallied up to a 2022 high, straight up impulse wave to the upside. If you do Elliott wave, there's a wave 2, there's a wave 4, so that's a 5 wave up. You go sideways. It only traced 38.2% retracement. So this sideways consolidation is probably the halfway point of the next move up. I bet you see 40 on this stock in the coming months.
Like those consolidations. Seems like we might need one of those in the overall
Yeah, we're
market.
breaking out right now, I think.
Totally. Tim, great information as always. Appreciate you breaking down the silver market. Folks, check it out. Oracle.com. We'll talk to you on Tuesday, Tim. Thanks so much.
Right. Thank you.
Thank you. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I'm getting the market saving itself a bit, bouncing off those lows. NASDAQ 100, we're a solid 90 points off of where we were at coming into the program when I was getting ready at 3 o'clock. You got the NASDAQ 100 now down just 0.5%. S&P's off by about 0.3%. The Dow off by 0.6%. Russell, though, leading the way. Look at that run. Russell's up 18 points from about 2:30. You're above the highs of the day. Just check out the Russell. Look at this heat map in the Russell. The biggest equity in the Russell doing well, man. Rocket Lab, Bloom Energy. Oh, and some of the gold companies, of course. Barrick. There's Barrick. $81 billion company, Barrick. And yeah, appreciate all the help there. EKS pumping in some of those SIL holdings. And if you're interested, folks, I was taking a look when Tim was talking about the SIL. So if you're looking at just when you're comparing what we were talking about there, when Tim was talking about the SIL versus the, which is the silver stocks, versus the SLV, which is silver, right? This is the SIL here. Wheaton, 22%. Pan American, 11%. Coeur d'Alene, I always say Coeur d'Alene, right? Coeur d'Alene, Core Mining, it used to be Coeur d'Alene. That's the D in there. Now it's Core Mining. Fresnillo, First Majestic, Hecla, Korea Zinc, Industrial, down the line they go. And yeah, but look at this. Between Pan American, Wheaton, and Coeur d'Alene, you're at almost 45% of that. But big equities in there and big positions. I mean, they own $1.4 billion worth of Wheaton precious metal. Now, Wheaton, they're about a $40 billion company, but the big equities for sure. And look at how these things have run. And even as they've run, though, as Tim was talking about, when you look at that, it is interesting to see. The metal went parabolic. And this got pretty frothy, but not quite as parabolic as silver. As you're sitting at 102 and you were at $80 back there in the October highs versus the SLV. You just went from about 48 and you're still a good 40% higher. All right, folks, thanks so much for tuning in, spending your afternoon right here. I appreciate you spending your time with me, folks. It means a lot. Have a great night. Have a safe night. Enjoy it out there. I'll see you tomorrow morning for the morning market kickoff. Thanks so much.